through some of the markets we've talked about before. So let's talk about Circle C. This is a second quarter review. In other words, end of June to the end of September. And there's a couple things here that I'll mention, one of which is not on the slide when I get to it. But when you look at the sales volume, it's up quite a bit this year versus last year, isn't it?
Absolutely.
And when you look at where we were before, days on market continue to be strong. Now, a year ago, days on market were 45, and they're down to 29. So the sales volume at 28.6 versus 24 had to come from somewhere. And so if we jump down there, units sold, 81 versus 77. Well, we haven't sold enough additional units to account for this giant jump in sales, have we? And there you go on the last bullet point. Median price, 335 this year, 306 a year ago. Now, part of this gets driven in Circle C by new construction. For the very reason we were talking about when you're talking about Circle C, you have an issue where there's not that much inventory. If you and I were going into Circle C, all price points right now, there are less than 30 homes on the market now. It's probably closer to 25. It changes on a weekly basis. But you're talking about 25 to 30 homes. And Perry, there's over 4,000 residential units in Circle C. That is an astronomically tight market. So when you look at a market like that, what you're talking about is you're talking about people who have a challenge. Imagine you're a seller in Circle C, and let's just take the extreme number of 25 homes available out of 4,000, and you start looking at that, and you're saying, there's less than 0.75% of the listings are on the market. A normal residential area sees somewhere between 5 and 7% turnover per year. Can you see where we're going to have a significant inventory issue in Circle C?
Already seeing it now.
Well, absolutely. I mean, it's here. Just take the numbers of what we're talking about. 3-month period, 81 sales, right? Let's round it up to 90, just to make the math easy. 30 a month selling. And we have 25 houses on the market, 25 to 30. So we have less than a month's inventory at the sale rate of the second quarter.
Doesn't take a rocket scientist to figure out those.
It's a significant issue. And it, again, we'll put the ceiling on it. I expect, and we talked to Standard Pacific about their Avania project last time. They're about 30 days away from opening that up. I expect that they're going to sell every one of those 75 lots just based on pent-up demand, including from sellers within Circle C that want to move to a bigger home within the first 30 days. That's my prediction. When you have this little of inventory. And now, seasonally, it obviously is lower than it was before when you're talking closer to 40, 45 homes. But that's still not enough when you talk about a turnover rate in a normal neighborhood. So Circle C is an example of something. And it doesn't surprise you when you look at the days on market versus where they were a year ago. That's along with the trend of what's going on in the market. And a lot, and this is the final thing I'll say about this before we get into it, I want to show you kind of a specific area and why I think you can show in an established area with no new construction that things are different in the neighborhood level in a big market like Circle C. In other words, 4,000 plus residential units, and we'll go look at a little area in just a minute, but this rise in median price is not sellers having the ability to just dramatically raise their prices. It's a function of where they're going and buying. New construction tends to be 400,000, and what KB was building down there in Circle C is even higher. KB Home was building things that high 4s, 5s, and 6s when you look at Fairway Estates and some of the other stuff they're building there.
Right.
Now, when you look at mid 3s to 400,000, sort of the sweet spot for Standard Pacific, if that's where a disproportionate amount of the unit sales go, what's that going to do to the median price? It's going to raise it. It doesn't mean if I'm sitting in a neighborhood in Circle C that I see pricing rising by that amount. I wanted to just tie that down so people aren't confused by the fact that it looks like a huge rise in the median price. A lot of it is driven by what's going on from the standpoint of the product mix and new construction taking a big share of the growth there.